Traditionally, when people talk about making a passive investment for income, they talk about investing their money into the stock market, into a dividend-paying company. So you look for a company like McDonald's that's been paying a good dividend, you invest your money into McDonald's, and then every quarter, McDonald's is gonna give you a dividend check. But I prefer real estate rental income, and I'm gonna show you why. Real estate is the best place to generate passive cash flow. The way it works is you can go out and buy a property. This can be a house, this can be an apartment building, this can be a mixed-use building. You go out and you buy this property, this building, and then you're gonna lease it out to somebody else who's gonna use your building. So in this case, we'll use a house, and now I'm gonna lease it out to this nice person with a mustache, with his wife who has a braid, or as we like to call it in my native language, Punjabi, a gut. This nice couple live in my home. Now, in exchange for them living in my home and using my home, they're gonna pay me $1,500 a month every single month for living in this property. I don't have to do any work after they move into the property because now I already own the asset. I'll give you another example of this. The minority mindset company's office right here is 2 floors, and I pay $4,300 a month to lease our office space. So this is money going to the landlord. I don't really see the landlord ever, but I give him a check every single month, and this is money that he uses to pay the mortgage for this building and put some money in his pocket every single month. The reason why I say real estate is the best place to generate this type of passive cash flow is because, for one, if you do it right, you're gonna be able to rent it out to somebody else, and this rent that you get is gonna cover your expenses, your taxes, your insurance, your maintenance, your management fees, and it's gonna put some money in your pocket every single month. And if you do it right, you can hire a property management company to deal with all the day-to-day work. So if something goes wrong, if the electricity stops working in this office, I could just call up the property manager, and then the property manager will take care of the issue, and the landlord won't even hear about it. So I like real estate because of the cash flow that you can get, and it can be pretty passive. I'll explain why I say pretty passive in just a second, but the second reason why I like real estate is because of the tax breaks that you get as a real estate investor. Now, although I am a licensed attorney, I'm not your attorney, so if you have specific tax questions, talk to a tax professional in your area. But the IRS rulebook gives real estate investors some of the biggest and best tax breaks that our tax code has to offer. I'll show you what I mean. So if I can rent out this home for $1,500 a month, and let's assume for the sake of this example that my expenses are $1,000 a month to own this property. That's my taxes, my insurance, my maintenance fees, my management fees, and my mortgage is $1,000 a month. This means that every single month I get to put $500 worth of profit into my pocket. This is the money that I get to put in my pocket, which means every year I'm putting $6,000 into my pocket. The second place where you want to be investing so you don't have to worry about money is in businesses. Now, the reason why I say in businesses is because this goal is to give you growth. With real estate, it was cash flow. Here, when I invest in businesses, I'm looking for growth. And the reason why I say growth in businesses is because you have to look at how do you attract money. The more value that you can provide, the more money that you're gonna make. Well, when you go out and you buy a home, or you buy an apartment complex, the only way that you can really add more value to raise rents is if you renovate the units and if you make the home nicer. But at the end of the day, if the location isn't good, you're not going to be able to raise rents significantly. So you're ultimately dependent on the location, which is why real estate is more of a passive way for you to generate that type of cash flow, versus in business, you can invest in companies that are working to produce more value. You can invest into a company, that way they can use your cash to hire more employees, to innovate, to create new products, to sell more products, because now the business is actively working to create more value and produce more revenue and make a bigger profit. Now, there's a number of different ways that you can invest in business depending on your risk tolerance. So I'm gonna do it in order of least risky to most risky. The least risky would be investing in the stock market. Now you're investing in established companies. Many times these are companies that are worth billions of dollars. Now, of course, you can see a stock go bankrupt, you can see a stock go to zero, but a stock that is on the stock market is less likely to go to zero than a startup that has less than $100 worth of sales. The second, which is a little bit riskier than the stock market, would be investing into what I just said, a startup. A startup now is maybe you're investing into a smaller company, a company that's working on raising their first million or 10 million or $100 million. You could invest some money into the startup, give them some money, that way they have some cash to go out and grow and hopefully get bought out, hopefully go public. That way you can then liquidate your equity and make some more money. This is what you see happen on Shark Tank, where the sharks, the investors, are investing into startup companies and they're hoping to see the startup companies grow. And then you have the option of investing in your own business. Now, I was really debating whether to put this here or this here, because when you invest in your own business, you're investing in yourself. And at the end of the day, you are your best investment, which is one of the reasons why it might not be as risky of an investment. But the reason why I put it here is because not everybody's meant to be an entrepreneur. And you don't always know that until you go out and try to start your own business, because starting your own business is tough. You have to be very disciplined. You have to be very creative. You have to be able to do the things that a leader and an entrepreneur does, which isn't always very intuitive. So that's why I put it here. But another way that you can invest in business is just investing in yourself and creating your own business. The reason why this is so important is because when you invest in businesses, you get equity. Equity meaning ownership, because that is the way that you build wealth in our economic system. Equity is so important because it allows you to monetize on perceived value instead of just the value that you created. So if you go to work every single day and you make $50,000 a year, you only get $50,000 worth of value. You're only getting $50,000. But if you're a company and you make $50,000 worth of profit, your company might be worth $500,000, 10 times the profit. Because now the equity, the value of the company is worth a multiple of that profit. So a way for you now to capitalize on this perceived value, this equity game, is by owning a piece of these companies. Now obviously you can invest in your own company where you work at, or you can go to the stock market and invest in some of these companies. This whole multiple valuation game is so powerful because it allows you to capitalize on this perceived value and allows you to capitalize on the growing values of companies that you believe in. Third, you want to invest some of your money into real money. And the reason why I say real money is because you want to have a protectionary investment. That way, if the American dollar begins to collapse, if the American economy really starts to go down and real estate prices now aren't worth as much and businesses aren't worth as much, you want to have something to fall back on. This is why I own some physical gold. Gold is your traditional inflationary hedge because gold has been used as real money for centuries, and everybody, whether you're in India, China, Mexico, United States, everybody knows the value of physical gold. So I own some physical gold for that reason. And the new thing that you're seeing a lot of young people move towards is Bitcoin. Now, I own Bitcoin as well, and I buy Bitcoin on a daily dollar cost average system, but Bitcoin doesn't provide you the same security that gold does. Sure, Bitcoin might be the next digital gold. Bitcoin has a lot of potential in the future, but it is not exactly there yet. It's not there yet in the sense of protection. It's not there yet in the sense of security. However, it might be there in the future, but because Bitcoin is just so volatile, you see so many crashes and swings up and down, I wouldn't say that it is your real money the way that gold is. Now, I believe in Bitcoin. I think there's a lot of potential behind Bitcoin, which is why I buy Bitcoin every single day. But I also own physical gold as another way for me to save money. I look at gold like real money. I don't really care about what's going on with the price of gold. I just look at it as a way for me to save some hard money because I understand that physical gold is real money. And if the worst were to happen and I need to pick up and go somewhere else in the world, well, I could take my gold with me and I know that I could convert my gold for another sort of currency or money or whatever I needed to do. So this is my protectionary. I know that gold will provide me with that. Bitcoin will hopefully do the same thing, which is why I'm buying Bitcoin. But this is, if the world starts to end, doomsday scenario, this is my protectionary investment for that. And Bitcoin is kind of that, but it also is a way for me to invest in the new age technology. It's a way for me to invest in the blockchain because I think there's a lot of value in Bitcoin. But again, very volatile, very speculative. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.